Yo, what is going on, everybody? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today we are going to be showing you a three-step process on how to execute options trades with consistent profits. Now, a lot of times options scare people away. You don't want to dip your toes in the water, and a lot of other times options just in general scare people away because they lose a lot of money. They lose consistently. Today I'm going to be showing you a three-step process that I personally use to execute consistent options trades with consistent profits. So hopefully it does help you out. All I ask in return is to smash the like and hit that subscribe button. Let's get into it. Alright guys, so this is going to be a relatively short video. The first thing we're going to be going over is implied volatility, technical analysis, and then time. Okay, now this is going to be a three-step process, and it's going to be pretty simple. Now the three-step process is this. If you look over at this box, it's going to say check implied volatility. Now, if you guys don't know what implied volatility is, or IV, you know sometimes when you look at a call contract or a put contract and you realize that the contract is extremely expensive or extremely cheap for some odd reason, that is due to the implied volatility. So right here we're looking at Tesla. If you look on the bottom right of the screen, you will see that implied volatility is extremely low. Therefore, the contracts will more so be probably cheap. Now, sometimes this can tend to give you an idea where price is moving with Tesla or where price may or may not move. So implied volatility also does help from a chart aspect, but I think this is important because it does tend to kind of make a median as to what you're spending for a contract. So I think this is extremely helpful. Now we're going to go over all of these in a real scenario in 1 second. Now the next thing after checking implied volatility is wait for ideal technical setup. Now this is pretty simple. This is pretty self-explanatory, right? If you see a stock doing this is more so bullish. Most of the time it's ping-ponging back and forth. Usually these break out to the upside and would be bullish. Therefore, if implied volatility is extremely low, contracts are cheap, you get this breakout out of the technical setup. And then the third thing is give yourself enough time. Now this is extremely important. There's a thing called theta. I don't know how much you as a viewer know about trading options, but you have to check theta when you are purchasing a contract. This is time decay. Over time, your contract loses value and can kind of go head to head with your profits. So you always make sure you want to take profits when trading options as well. Now, the only things that can really affect these is you not creating a strategy or creating a strategy. So make sure you create a strategy when you enter a trade like this, such as, a stop loss or when to get in, when to get out, take profit, etc., and check for upcoming catalysts before you enter a trade. I think this is pretty self-explanatory. You don't want earnings the next day and you bought, a call just because you bought a long-term call just because implied volatility was good, your technical setup was good, and you gave yourself enough time in the future, right? You don't want to see earnings the next day. So make sure you check for upcoming catalysts as well. Now, putting these all into motion is pretty simple. If we take a look at Tesla, IV is extremely low, and we pop over to Tesla. This is pretty simple, right? If we were going to do more so a long-term one and give ourselves a lot of time, let's say right here, we're on the daily chart, you can see this pan out right here, right? You're in kind of this falling bull channel here, ping-ponging back and forth, and you're waiting for this ideal breakout. Now, what I would say is an ideal breakout is this is not an ideal breakout, right? Coming up and being right here. I would not buy my contract right here. And the reason for that is it's actually pretty simple, right? If you put a line right here, you'll see that there is resistance at this level once, twice, and essentially almost a third time back here. But even still, wait for confirmation. This is extremely important when trading options, because a lot of times you'll just jump in and then your contract will just completely wipe out your account, and people do it time and time again. So wait for that ideal technical setup. Now again, it's pretty simple. If we were trading on, let's say, the 15-minute time frame, and I actually didn't set this up before the video, but I'm just going to show you from a technical standpoint right here. I can see this right here, that this kind of had a double top overall on the 15-minute time frame. This is when it hits resistance twice and gets rejected both times. Now, it didn't completely sell off out of this, so this is a bright side. You can see that you have some strong support down here at around 285. So this right here would have been the perfect time to enter, say, going long on a call, buying a call. And the reason for that is if you look down here, you will see that implied volatility is extremely low. It's below the midline. It's red. The price is extremely low. Price also hit support, and it bounced off of support. So I would say confirmation would be breaking this level right here. You could have scalped and got out right around here on Tesla. And also, even if you gave yourself enough time, this is still a decent trade to take. Now, this is just an example. I didn't pull up the Tesla chart. I didn't, tweak it out. I just wanted to kind of give you guys something very, very extra, right? So now let's pull up the S&P 500, hide all these drawings here. Actually, you know what? Let's go to a stock we've never pulled up. Let's pull up Walmart. Let's pull up Walmart because I believe I don't have any drawings on Walmart. Okay, so we have Walmart pulled up right here. We can see it's ascending right here, probably following a recent trend line exactly like I thought. Now, if you take a look at the larger time frame, you also want to check multiple time frames extremely often here. You will see that Walmart kind of flip-flops around this trend line. Now, this is kind of risky, and the reason for that is actually because it's fighting resistance. It got support right here, support right here, support right here, here. Support becomes resistance, resistance becomes support. As you guys can see right here, it got a fake out breakout and instantly got smacked down. Now, if you can tell right now, it's making higher high, higher low right here. This is a good sign that Walmart is going to get another push off of this. Now, the next thing you're looking at, IV, boom, it's very nice. Theta, I would probably grab a month or two out just to give it enough time to reach new highs because Walmart does move slow as a stock. You can kind of see this. I'd at least give it a couple months out just to be safe, even if I did get out next week. But essentially, I would be waiting for a pop back over recent highs right here, and then I would probably enter the trade and get out when it gets rejected at the next resistance. So technical analysis is extremely important in my opinion. Again, another little scalp right there. And just as an example, for this scalp, you would have already made 5%, so 50% on a contract right there, in and out. So this is the three-step process. Hopefully you guys can, take a screenshot or write this down. Let me know in the comments if it does work for you. I appreciate you all watching. And honestly, if you want up to 10 free stocks, make sure to hit the link pinned in the top of comments and deposit 100 to download and sign up for Moomoo. You will also get free access to trading options, level 2 order book, seeing other exchanges, and more. That's it, guys. I love you all. Make sure to subscribe to the channel. Peace.